Perfect. I'm going to share my screen. We are supposed to complete the section B type questions of the paper which we were discussing on that day. Apologies. Let me connect my camera. Perfect. Just confirm, you guys are here, like on this screen. If yes, so I like to proceed towards the we were doing ATX past paper. We were doing practice paper one. Practice paper one. Yep. So we did the core equation. I do remember. So I'm like holding for some time. Uh, Request you guys to reach over here. So we did this part. Uh, I'm waiting. Once you guys are on this screen, please do let me know. I request the feedback from all of you. Those who are attending the session. So Abdul Wahab, Easter, Eva, Hassan, Afzal, Hassan Zahid, Abdullah Siddiqui. Thank you, Abdullah. Norman, Omes, Hassan Lalwani, and Rishu. So I request all of you, once you guys are here, please do let me know. Eva noted, Abdul Wahab noted, Easter noted, Vishu. So, Hassan Zahid, yes, if you have any particular query, any kind, you can raise it. Else, in what is in my mind to complete the section B type both questions of the paper which we started on Friday. Do ask your query, please. Twister, the answer is yes. So we can get both PPR relief and return relief at in a given in one situation. But keep remember, it would not be possible to get both reliefs on one particular area. So, for example, letting relief concept applies when a person who is residing in the property has let out some of the portion of the property. For example, the rent a room kind of situation. So, in such situation, for the let out portion, we get the rent a room, we get the letting relief, but on the portion in which the person is residing, we get the PPR relief. Important thing is, uh, we can get both relief at any one particular point of time, but on particular area of property, for example, we cannot get both reliefs, i.e., due to reliefs, taxable gains cannot be negative. I hope I responded to your question. For sure, Hassan Zahid. And if still I forgot, so I don't know how much time we'll be taking to address the queries. If it could be late, like like the Friday class, then what I will do is we can connect some other time on phone, let's say, or on WhatsApp. Okay, perfect. So I hope all of you guys are here. I'm moving forward. I'm going to start the first question of section B. You should assume that today's date is 1st May 2023. Thomas and his wife, Ines, require advice in connection with the following: the tax implications of commencing to trade, the choice of accounting date for a new business, voluntarily registration for VAT purpose and implications of purchasing services from overseas, the tax implication of selling shares in respect of which enterprise investment scheme relief has been obtained. The following exhibit on the left-hand side of the screen provides information relevant to the question. Thomas and Ines, this information should be used to answer the question requirements within your chosen response options. I just read this much, like only this area. I do recall in the last class on Friday, one of your fellow raised a point like there is no VAT in section A, and that was the fair observation. I won't disagree. But if you notice, VAT was not in section A, VAT is now in section B, and I'm very much confident if I look into the requirement relating to this part, it would be minimum 5 marks. So it can be more than five, but it would not be less than five. So on the assumption that Thomas prepared his first set of accounts to 31st March 24, explain with supporting calculations the difference in total amount of tax payable by him for the year ended 31st for the tax year 23-24 as a result of profit on sale of sporting memorabilia being treated as trading income rather than chargeable gain. Okay, so here I'm supposed to compare the difference between treatment of tax implications of trading income versus chargeable gain. State two advantages for tax purposes. State two advantages for tax purposes if Thomas were to take up his accounts to 30th April each year as opposed to 31st March. B1, explain two matters which Thomas should consider when deciding whether or not it will be financially beneficial to voluntarily register for VAT. Assuming Thomas does voluntarily register for VAT, explain the implications of purchasing advice from the overseas supplier rather than using one based in UK. 6 months. So, like I said, VAT would be minimum 5 months. It can be more, should not be less. Explain the tax implications for Ines of her intended sale of Tevira Limited shares on 1st June 2023 and calculate her after tax proceeds. Professional marks will be awarded for demonstration of skill and analysis. Hmm, I don't know. I am unable to. Sorry, that's compulsory for me because I was unable to minimize that. Perfect. Explain the implications for Eins of her intended sale of the Chavira Limited shares on 1st June 23 and calculate her after-tax proceeds from this sale. Professional marks will be awarded for the demonstration of skills in analysis and evaluation and commercial acumen.
आ रहे देख लिया मैंने।
Hmm. I request to take care of your mics, please. Thomas. Thomas is UK resident and domicile, uses his capital gains tax annual exempt amount every year, which means if any capital gains tax implications, annual exemption would not be available. Receives dividend of 2000 every year. It means if any taxable dividend that would directly gonna tax at basic, high or additional accordingly, i.e. no dividend, nil rate band available. Thomas sale of sporting memorabilia. Thomas started selling items of sporting memorabilia from his collection during the tax year 22-23. HMRC agreed that these sales should be subject to capital gains tax in the tax year 22-23. In April 23, Thomas started purchasing and selling more items of sporting memorabilia, such that HMRC have said that he will be regarded as trading with effect from 6th April 2023. Thomas will not be required to register for VAT for the foreseeable future. Thomas will, however, consider registering voluntarily for VAT if it is financially beneficial for him to do so. Thomas will obtain advice on how to develop his business through the use of social media and has been recommended a company based overseas in a country where the VAT rate is 9% to complete his work. Thomas expected trading results from the sale of sporting memorabilia. Thomas is considering either a 31st March or 30th April year end for his business. Thomas estimates that his total income less expenditure for 12 months ending 31st March 24 will be 14,000. Each item of memorabilia is purchased and sold for no more than 1,000. All of the cost he incurs are deductible for tax purposes. Thomas expects his profits to increase steadily after 1st April 2024. Eins is UK resident and domicile, is higher rate taxpayer, will make no disposals for CGT purposes other than as described below. So this statement means for Eins, annual exemption would be available. Eins sale of painting. Eins sold a painting on 4 July 2020 for proceeds of 196,000. The sale gave rise to a gain of 86,000. Acquisition of shares in Tavira Limited. Eins subscribed 72,000 for 20,000 shares in Tavira Limited on 8 October 2020. The shares are qualifying enterprise investment in scheme shares. Eins elected to defer the maximum possible amount of the gain on the sale of painting against the acquisition of shares. Eins obtained EIS relief of 18,600 against her income tax liability for the tax year 2021. So why 18,600? So if I think loudly, 21,600. So 30% of 72,000 is 21,600, and Eins obtained a relief of 18,600. Eins intend to sell all of the shares in Tavira Limited for 95,000 on 1st June 2023. If undertaken, this sale would qualify for business asset disposal relief. Fine. Just a second. Um, should we start? Let me check for a comment. Is there any part of the requirement which is not clear to you guys? Please do raise your hand. In the meanwhile, sorry. In the meanwhile, to on your query, Easter, I just noticed your question. Are you saying that because of the conditions of PPR, it will be hard to obtain letting relief because letting relief requires that person is staying in the residence and letting out of a portion of it? So I'm not saying very honestly whether it's difficult or not. So at the moment, with respect to letting relief, that's not my point. My point is relief should not be double counted. So it's not practically and logically possible that you get both the reliefs simultaneously on similar area of property. So for example, if the house consists of ground floor and first floor, and I live in ground floor, first floor is let out, it's quite possible that I get PPR relief on the portion where I live, which is like the ground floor in my example, and the first floor area, which is like let out, I get the letting relief. So both reliefs can be done simultaneously. But the point is, it is not possible like we get PPR relief on ground floor and first floor, and for first floor only, I get the letting relief. I hope you understand. If I follow or view this kind of thing, there can be a double count of relief, which is like prohibited, which is like practically not possible. You are most welcome. Okay. hmm, so I'm putting a heading: tax treatment on sale of sporting memorabilia. Now, uh, Thomas is carrying on trade of selling sporting memorabilia income tax. So from income tax perspective, it is estimated that his total income less expenditure for 12 months ending 31st March 24 will be 14,000. Right? So with respect to income tax, $14,000 would be his income less 12570. Okay, so previously he has, if I exclude this 14,000, so what I understand is like he has only income of 2,000 dividends, right? So it means his annual exemption would be completely available. So in case his annual exemption is completely available, so 14,000 minus 12570, the difference is 1430 into 20%. So income tax would be like 1430 into 20%. Then no tax will arise on dividend as it would be 1430 into 20% is 286. Thank you, sir. Then person has to pay NICs. Class 2 NIC. The rate of class 2 NIC is 3.15 into 52 weeks. Class 2 NIC amount.
एक पाव बोल रहे थे मैं आधा किलो लिया
Umesh, I understand this. So please request you to take care of your mind. So this is like the story of every home. I understand. I also faces the same at times. Well, class 4 NIC. Class 4 NIC is on trading income. So 14,000 is my trading income minus 12570 multiply by class 4 NIC rate. Let me check, please. You know, I don't know why I am like every time I feel like I need to see the NIC rates. Um, 10.25. I understand. So I'm not saying anything. Yes, please. This one amount 3.15 multiplied by 52. I'm rounding. Thank you, Easter. I'm rounding it off to 164. Class for NIC amount. $147. Thank you. So as a result, now if I conclude, the total income tax and NIC liabilities would be 286 plus 164 plus 147. The sum amount. Can you please confirm me the total income tax and NIC liabilities amount, the sum of these three figures? $597. Perfect. Hence the difference in total tax and NICs which will be payable by Thomas for 23-24. So yes, honestly, so I'm not commenting at the moment whether it's wasting or non-wasting, irrespective. If it's wasting without any amount, completely exempt. But if non-wasting, so I am like, bit silent on this front, but my other statement of 6,000 thing captures both the aspects. Um, is there anything to ask in part A1? advantages for counting period to 30th April each year. To Easter, the last bit about the chattels front was, so if chattels tangible, so since chattels are tangible, movable, so they are chattels without any doubt debate. We just need to decide, is it a wasting chattel or non-wasting chattel? So I don't know honestly whether the sports memorabilia is a wasting chattel or non-wasting chattel. So I'm like silent on this one. I keep a generic comment like it's a chattel for sure, tangible, movable, and I put a comment: cost proceeds less than 6,000. Why are why are this comment of cost proceeds less than 6,000? If nevertheless if it is wasting, then also exempt, non-wasting, then also exempt. So it's like single statement captures both the aspects. Well, I hope part A1 is clear. Let's head towards part A2. Part A2 is like generic in nature, so that it has nothing to do very much scenario specific. 'The advantages of adopting year end of 30th April as opposed to 31st March. 30th April year end date maximize the interval between earning the profit and paying the tax on those profits. 30th April is the start of tax year, whereas 31st March is at the end. So with the 30th April year end, there is more time to plan before the tax year ends. Tax return. Uh, any further thing? So I understand two advantages. We are done with two advantages. So to Easter overlap is not an advantage. It's a disadvantage for 30th April because if you opt for 30th April, you will have more overlap profits. So that's the negative side of 30th April and at 30th April, not the bad things of 30th April. Any further thing? There is one further thing, seriously. So we discussed about planning. This one. Planning is captured over here. Let me tell you, there is one thing which is linked with the scenario. And since there is a hint in the scenario, that's why I'm talking about on those lines. Have a look. Thomas expects his profits to increase steadily after 1st April 2024. In a rising profit environment, remember, if we select the earlier accounting date as opposed to the later accounting date, this thing also delays the tax which has to be taxed because earlier date means the less amount of increased profits considered in this period. Right? Right. So less amount of increased profits include in the current year, whereas if we keep a later year end date, the more increased profits included in the year. So I'm going to write this. I don't know you guys understand this thing or not. A 30th April year end is financially beneficial for Thomas as the profits of his business are expected to rise steadily from 1st April 2024. This will mean that less tax will be paid in the early years of the business as the assessment for those years based on earlier. Any two would work. Abdullah, the answer is that I missed your comment. Let me explain your comment along with. The answer is no. So point one, this is to Abdullah. Point one talks about the time gap between earning the profit and paying the tax. It is something else. Point number three, we are like, just imagine if your profits are on increasing trend. if you keep 30th April year end, so only the 4 months profits will be included. Whereas imagine if you keep a 31st December year end, imagine whole of the year's profit will be included. So as a result, as opposed 30th April versus 31st December, based on the current year basis at the moment, ignoring the business start element, current year basis, both businesses would be like from an accounting perspective, from absolute monthly profitability perspective, under both the situations, it would be same. But from tax payment perspective, because 30th April, less amount of increased profits included. That's why less amount of income for this year. And 31st December, more amount of increased profits included, more amount of tax for this year. To Easter, with respect to point number one is like, if you keep, forget about the business start, do imagine the current year basis element. If imagine current year basis, if imagine current year basis, imagine a current year basis situation. If 31st March is your year end date, if 30th April is your year end date, what it makes the difference? Let's say 31st March 23 versus 30th April 23. I'm talking about only a month difference. The difference main would be 31st March 23. If with respect to current year basis, March 23 falls into the fiscal year 22-23, the profits will be taxed in fiscal year 22-23. And for 22-23, you are supposed to pay the tax on 31st January 2024, like the tax return filing date. But if your year-end date is 30th April 23, April 23 means we are talking about fiscal year 23-24. And for 23-24, the tax should have to be submitted by 31st January 2025. So it means your year-end date is April 23. You have to submit the tax on January 25. As a result, giving you more time, maximum time, I would say, to submit the tax. Easter Abdullah and all others. Are all of you clear with this? No. So point one talks about the return filing. Point two talks about the payment, the planning, tax planning element. So imagine if it's 31st March, you have just 5 days to plan the tax, because once the year ends, you cannot change it. But if your year end date is, let's say, 30th April, and you came to know what is your profits for the year, still you have from 30th April to 5th April of next year to plan the tax. Like you can make personal pension contributions, you can make EIS, SEIS type of investments, etc. Yep. So point one talks about filing. Point two talks about payment and planning, both elements. Point three talks about the amount of profitability. So point one, nothing to do with the amount. It's just that we get more time. Point two, it's just we get more time. Not talking about the amount of profit. Whereas under point number three, I am like the amount of profit will be changed. The fiscal year starts from 1st April. No, Rishu. This is strictly for companies. For trading income purposes, the fiscal year is still from 6th April to 5th April. In general, would you say is the disadvantage of overlapping profit? So disadvantage of overlapping profit is at a start, at least you have to pay the double taxes. So this is the disadvantage of overlap profit. So no one wants to pay the double tax. Even though I would commit, you will get the relief in future, but at the moment, no one will be willing to pay that double taxation. So that's basically the disadvantage of 30th April, because in 30th April, there will be highest amount of overlap. Whereas if the year end date is 31st March, there will be no overlap profits. Yep. So I agree. Like, imagine if I ask you, uh, pay the double amount today. Once you will seize the business, we will return it to you. But at the moment, pay it today. Would you be willing to pay it today? Honestly, because once you are starting the business, your by default assumption would be you will continue, like you would always love to talk about your evergreen business element, right? That's what I agree. And even imagine today it is committed, but later on, if the rule change, for example, then what you can do, you cannot fight with the government. So I'm not doubting on the credibility. I'm talking up on the fact, like point B, sorry, requirement B. Explain two matters which Thomas should consider when deciding whether or not it will be financially beneficial to voluntarily register for VAT. Matters to be considered by Thomas in deciding whether or not it will be financially beneficial to register for VAT. What are the key matters which should be considered before deciding whether uh, we should consider to register for VAT? And again, this benefit would be from a financial perspective. So from financial perspective, the important thing is the VAT status of supplier. Good one, both of you. So let me have word on these two lines one by one. The VAT status of suppliers. First thing to consider. If Thomas suppliers are VAT registered, Thomas will be charged VAT on his purchases. Which he will be only able to recover if he is registered from VAT. However, if he purchase from non-VAT registered business, or members of public, he will not suffer any input VAT. So there will be no benefit Rishu, the answer is yes, because in such situation, Thomas wouldn't have paid any kind of VAT. If not paid any kind of VAT, there is no concept of recovery. So, to Easter, yes, you are right. But at the moment, just do let me know. At the moment, is our discussion is towards pre-registration or it's registration in general? So, if it's registration in general, then we should not talk about the pre-registration stuff. I hope you understand this thing. My point is, you are commenting with respect to pre-registration, right? Does the requirement ask me to discuss about pre-registration element, or are they talking about registration in general? So if they are asking about pre-registration, that's fine. But in my view, the requirement very clearly asks about the advantages of registration in general. If Thomas customers are so your point was correct, Easter, but all of you, a request to all of you, please be vigilant what is being asked. What you guys like, just imagine if someone asked me, how old are you? And I'm keep telling I'm in, let's say I'm in grade 7 or grade 8. So don't behave like this in the exam. You the marks will be awarded for the answer of question which is asked. If you keep telling generic things or other things which are not required, you will not get the marks. If Thomas customers are registered for VAT, they will be able to claim they will be able to reclaim the VAT charged by Thomas However, if they are not if they are not VAT registered, the VAT will represent an additional cost to them, which may make Thomas price uncompetitive. So I'm done with part B1. If there is anyone who is like not clear, please do raise your hand. I understand you guys would be reading slash copying this thing. I have paused the screen for like 1-2 minutes and putting a heading for part B. Uh, Rishu, I really wonder if I answer this question, you will not you, majority of the universe will start following this advice. So I won't say do not answer them. Like on best effort basis to the closest mix, you should respond because if you are not clear with the requirement, it could be whatever you are writing could be correct. So you never know, you know. So I have put the second heading as well. Like I informed you guys, I paused my screen. Okay. Overseas, if the reverse charge procedure, I need to document over here. The provision of this advice will be a supply of service. Thomas will be required to pay VAT to HMRC the rate of VAT on overseas the input VAT can be as any other reverse charge procedure. The last concluding statement. Hassan Afzal, perfect. So, like, just starting 2 points are just reference, and in the ending 2 points, I exactly captured the point you mentioned. Good one. Any question from the VAT perspective? Again, Umesh, you can see the requirement B1 and B2 combined. B1 and B2 is of 6 marks. So honestly, that's not an issue. Whether you write it in a paragraph or in bullets, the important thing is the message has to be communicated. Secondly, the only reason I prefer the bullet points is, and that's probably something which resides with me as Qunber Raza rather than I am guiding you as ACCA tutor. I mentioned 4 points now, so I'm confident I mentioned 4 points. In paragraph, at times this thing is missing, like how many points you covered. So to Eva, considering the fact that UK is no more part of European Union, so be it within European Union or outside European Union, it makes no difference. Now, previously, when UK was part of European Union, yes, it matters. But at the moment, no. You're most welcome. Can I move towards the last part of the requirement? Sale of shares in sale of Tavira Limited shares. So just for reference, I have put up the heading and about to start, but before I start, I need to revise the EINS. EINS is resident, UK resident and domicile, high rate taxpayer, has made, will make no disposals for capital gains tax purpose other than as described below. Sale of painting. Sold a painting on 4th July 20 for proceeds of 196,000. The sale gave rise to a gain of 86,000. I subscribed 72,000 for 20,000 shares in Tavira Limited on 8th October 20. These shares are qualifying EIS shares. I is expected to defer the maximum possible amount of gain on the sale of painting against the acquisition of these shares. Ines obtained EIS relief of 18,600 against an income tax liability for the tax year 2021. Ines intend to sell all of the shares in Tavira Limited for 95,000 on 1st June 2023. Right? I'm reading the requirement again. Explain the tax implications for Ines of an intended sale of the Tavira Limited shares on 1st June 23 and calculate her after-tax proceeds from this sale. Fine. Can someone please recall me what's the time limit holding duration for EIS share? Someone? Holding duration requirement for EIS shares? Easter I noted. Anyone further? Easter, just to rectify, 3 years is for EIS and SCIS. 5 years is for VCT. So we are not talking about VCT over here. We are talking about EIS, SCIS. Okay. If the shares in Termina Limited are sold on 1st June 2023, as the shares, apologies for this, as the shares were acquired in June 2020, if I'm not wrong. October 2020. Hassan, 3 or 10, the answer is no. I guess you are referring towards the share options element. So there was minimum maximum. Yep. So I just answered that. Yes, you are right. So it's to be exact. The 10 years element is for three minimum, three maximum 10 element is for share options thing. So that's not for the tax efficient. That's not for tax efficient investments like EIS, SEIS. The following consequences will therefore arise. First, chargeable gain of what is the amount of chargeable gain? He sold for 95, purchased for 72. Will arise on the sale and the EIS income tax relief of 18,600 would have been withdrawn as the shares were not sold for years. Irrespective of within 3 years or after 3 years, irrespective of within 3 years or after 3 years, irrespective of whether the shares in Tavira Limited sold within 3 years or after 3 years, the deferred gain on the disposal of painting the gain on disposal of painting which was deferred on the acquisition of shares being bought back into the charge. The gain on the disposal was 86,000, but the maximum amount of the gain deferred was restricted to the qualifying expenditure of 72,000. Eins capital gains tax liability. So Umesh, arm's length, not arm's length, was at time of loss. So since the shares are not sold at a loss, shares are sold at a pure profit element. That's why I have not no. That's why I have not considered the arm's length or not arm's length element. I hope it's clear, Umesh. Arm's length point. Yes, you can use that. Honestly, that's not an issue. Like whether the use of simple bracket or a square bracket. I don't recall this thing to be of any concern. But based on my fundamental mathematics principles, the basic level of bracket is always the simple bracket. Then, you know, one step ahead is curly bracket. Then a square bracket is, the superlative kind of thing. So this is my understanding, but I don't recall any such limitation kind of thing with respect to ACC. But whatever you use, you should be consistent. That's what my key take on this. So over here, uh, Working one, Eins, CGT, liability. Uh, Gains are of two types. The gain on disposal of Tavira Limited shares would qualify for BADR. Why they would qualify for BADR? Because if I look into the exhibit, if undertaken, this sale will qualify for business asset disposal relief. So I can for surely say, like holding duration condition is met. We calculated this thing to be 23,000, right? Annual exemption. One thing to highlight, Eins is a high rate taxpayer and make no disposal. Since Ein has make no disposals, that's why considering annual exemption. That's why considering annual exemption. And since Ein is high rate taxpayer, hence just looking for the comments. You're most welcome, Rishu. Twister, the answer is yes. All of the conditions has to be met. If any of the condition is not met, there will be no BADR. Fine. I discussed about gain on disposal. Fine. $95,000 minus 14240. 95,000 minus 18,600 minus 62610. I'm done. If still any question, please do raise your hands. Just a second. Let me look for your queries, if any. Rishu, if you give this explanation, that's very good to have, but maybe not very much necessary. But still, I would say it's good to have. Like, it's good that you give this explanation. So, Abdullah, for EIS under deferred gain, they do not deduct from the cost of asset. They simply frozen because imagine the gains belongs to the disposal of painting. The gain doesn't belong to the disposal of shares. And painting is not a qualifying asset for BADR purposes. That's why there should be no BADR on this 72,000 element. Logically, it should not be. Again, I repeat, because the gains of 72 belongs to the disposal of shares. Sorry, 72,000 belongs to the disposal of painting, not the shares. So for SEIS, the answer is no, because for SEIS, if you hold till particular time, some of the shares are exempt, not deferred, it's exempt. But if not hold, then yes, it would be same. So if within 3 years, yes, it would be same. If a fixed machinery is exclusively used for business, does it qualify for BADR? Yes, if you talk about machine ratio, if you talk about machine, so BADR has its own conditions. Selling out complete or major part of business, selling out the share of partnership, or selling out the shares of a company. So if you ask me about any individual asset, BADR on any one individual asset, difficult. But if the individual asset is part of group of assets, and the group of asset here, I mean, you are selling out your business. And while selling out your business, one of the asset is machinery. Then would it qualify? The answer is yes. So, Vishu, then if you are seizing your business and disposing of individual assets, then there is a 4-year time limit. So if you are disposing of the assets within, not 4 years, sorry, there were 3 years time limit. So if you are disposing of the asset within that time limit, then BADR would be available. Otherwise, no. So if I notice you still simply wants to hear probably yes or no, and in text there is no simple yes or no. There's always if and buts. Can I move ahead? Next question, please. Thank you. You should assume that today's date is 1st March 2024. Pedro lets out a holiday cottage which he was given by his aunt. He requires advice in respect of the following: the inheritance tax implication of the gift of cottage, the furnished holiday lettings, and the income tax implications of making a contribution into his personal pension scheme. The exhibit available on the left-hand side of the screen provides information where relevant to the question. Pedro, explain the inheritance tax implications of the gift of cottage to Pedro at the time the gift was made, and as a result of Marina death, explained by reference to the relevant conditions why the holiday cottage as unfurnished as a furnished holiday letting for the first 12-month period of letting. Calculate the reduction in Pedro income tax liability for the tax year 23-24 as a result of making the planned contribution of 85,000 into his personal pension scheme on 31st March 24. Your answer should include an explanation of amount of personal allowance available to Pedro in this case. Analysis and evaluation and commercial acumen. Fine. Let me start reading the scenario. Pedro was given a holiday cottage in the UK by his aunt Marina on 4th March 13. Paid inheritance tax personally in respect of this gift of holiday cottage following Marina's death on 8 June 2023. Inherited a portfolio of UK unfurnished residential properties valued at 670,000 on Marina's death. Gift of holiday cottage in the UK by Marina. Marina and Pedro agreed that they should stay in the house for 2 months each year, rent-free, which she did every year until her death. For the remainder of each year, Marina lived in her main home. Pedro property income. The cottage, which is fully furnished, has been available for rental on commercial basis continuously since 1st July 23 and will have a 70% occupancy ratio for the first year of letting. No tenant will have stayed in the cottage for more than 14 consecutive days during the first year of letting. The taxable rental income from the cottage in the tax year 23-24 will be 14,500. In the tax year 23-24, Pedro will also receive taxable rental income of 32,000 from the unfurnished residential properties which he inherited from Marina. Employment income. Pedro has been employed by LOL Limited since 6th April 2022. Pedro receives an annual gross salary of 75,000 from LOL Limited. LOL Limited has contributed 8,000 in each of the tax years 22-23 and 23-24 to its occupational pension scheme on behalf of Pedro. Fine. Personal pension scheme. Pedro has never been a member of pension scheme prior to taking up employment with LOL Limited. Pedro wishes to start contributing to a personal pension scheme in the tax year 23-24. Pedro intends to make his first contribution into the new personal pension scheme of 85,000 gross on 31st March 2024. The annual allowance available to Pedro was not restricted in any previous tax year. Pedro income tax liability for the tax year 23-24 before taking into account planned contribution into his personal pension scheme is 40,332. Fine. Just a second. So in the meanwhile, anything which is not clear from the requirement, please do raise your hand. In my personal opinion, a spreadsheet will be used a lot in part C of the requirement. Requirement. Explain the inheritance tax implications of the gift of cottage. Pedro. Annual allowance means the 40,000 annual allowance limit per year. This is to Easter. Just before I start writing, so the first requirement is of 5 marks, second requirement is of 5 marks, and the third requirement is of 10 marks, right? So annual allowance means the specific limit of pension of 40,000. Rishu, for sure, when I start about to start the part B of the requirement, yes, for sure, we'll call out the conditions of FHL first. Then we'll start working on it. Thank you. Now, inheritance tax implication of the gift of cottage. The gift of cottage the gift of holiday cottage was a potentially exempt transfer. And therefore, no tax was payable in Marina's lifetime. Although Marina died more than 7 years after making this gift, IHT was payable as a result of her death as the gift was constituted as gift with reservation. Why it is the gift with reservation? This is because Marina continued to derive benefit from the use of holiday cottage following the gift, as she did not pay a market rent for staying in the cottage. Hassan, Hassan Afzal, it's more than 7 years because if I look into the scenario, Holiday Cottage was transferred on 4th March 2013. And if I look over here, she expired on 8 June 2023. So it's like more than 7 years. The reservation was not lifted prior to her death. And therefore, the IHT payable would have been the reservation was not lifted prior to her death, and therefore IHT payable would have been calculated by including the cottage in the state of Medina. Hassan, yes, Rishu pointed correctly. That is because due to the gift with reservation. So under gift with reservation, that's part of the if reservation lifted before time of death, then the date when reservation lifted, that date is deemed to be considered as deemed date of PET, i.e. lifetime transfer. As the value of a death it exceeds the nil rate band of and how can I say that? As estate includes the portfolio of properties valued at 670,000. As the value of estate exceeds the annualized band of 325, IHT was payable on the estate. The IHT on the IHT attributable to the cottage being given with reservation and done with part A of the requirement. I'm putting the heading in the meanwhile. Explain why holiday cottage will qualify as furnished holiday letting for first 12 months of period. Furnished holiday letting. Three conditions. The first condition, it should be available for letting for more than 210 days in a fiscal year. Out of 210 days, it should be actually let out for more than 105 days in a fiscal year. The property should not be let to a single tenant for longer period, and longer period means more than 30 days, and the property should be based in UK. So these are the major conditions for the furnished holiday letting. Is it clear? If yes, then I like to start discussing point number B. Requirement number B. Issue three conditions for the property to be treated as FHL. The first condition, it should be available for letting. It should be available for letting for at least 210 days in a fiscal year. Second, it should be actually let out for at least 105 days in a fiscal year. Third condition, it should not be let for a longer period. Longer period means the continuous period of 30 days. Means it should be like small chunks, small portions. It should be used for letting of a small chunks, small portions, not for a longer period. The last thing, the property should be based in UK. Perfect. So let me start addressing this piece. The letting of the holiday cottage satisfies all of the conditions to qualify for FHL as follows. The cottage is available continuously for commercial letting so we'll need the condition to be available for at least 210 days in the first 12-month period. The cottage will have a 70% occupancy rate. Throughout the period, it is available for, for letting, such that it will be available, it will be actually let for at least 105 days no tenant will stay in the cottage for more than 14 consecutive days. During the first year. For which it was available for letting. So there is no possibility of the number of days of longer term occupation. The cottage is situated in UK. Has been let furnished and on a commercial basis. Apologies, I missed this comment. Let me have a look. How does satisfy the constitution question mention 14 days? So is the over here it should be less than for 30 days. So if the person is staying for 14 days, so it means less than continuous 30 days. I had this convert usually when we use cap. Then it's a type of thing. So, Rishu, allow me to copy paste your comment so that everyone would be aware what I'm going to answer. And please don't mind this. So, guys, just a situation. Just a situation. Easter, let me explain the point number 3 again. At times, this is a common feature. Once we press the caps, we keep typing, 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 and then we realize, oh, the whole of the statement is in caps. So that's why, personally speaking, I do not advise to press the caps button to type the uppercase. Rather, I always advise to while you need to write the uppercase word, press the shift and that particular button, that particular alphabet. So that alphabet will be reflected in the caps. I hope you understand. So honestly, whenever I use the caps, I do not press the caps button and then start typing it. I always keep pressing shift key and press that particular alphabet. So for example, press shift and let's say A, B, or C. And the beauty is if you have turned off the caps and you are typing including shift key, all would be typed in caps. If caps is on, press the shift key and you type, it would be in lowercase. So I advise you guys to manage it in this way. I hope that would be clear. Point 3 explains perfectly. Thank you, Easter. Sorry, I misinterpret your comment initially. I hope this caps point is clear to all of you. That's good, and that's very good to see. Like you are honest in raising your concerns. And apologies if you feel anything negative. I posted your comment, but honestly, that was a fair concern, which normally students face. That's why I want to share with public at large. Honestly, nothing else. Perfect. But Rishu, all this thing is not possible to change overnight. So you need to practice for this change. Calculate the reduction in federal income tax liability for the tax year 23-24 as a result of making the planned contribution into personal pension scheme. So I'm going to calculate reduction in federal income tax liability as a result of making planned contribution into his personal pension scheme. Inshallah. So there are two aspects, two parameters to this question. The first parameter is about the income tax liability, and second is about the pensions element. Because if I look, your answer should include an explanation of the amount of personal pension available to Pedro in this case. So let me first have income tax element and then income tax liability with contribution will be okay. Let's start working on the spreadsheet. So working one, and this working is income tax liability I need to relook for the Pedro situation. Employment income 75, fine. Law Limited has contributed 8,000 in each of the tax years 22, 23, and 23, 24. Member of pension scheme, which is to start contributing 85,000 gross. Property income cottage, which is fully furnished, has been available for 1st July 23. We are talking about fiscal year 23-24. So if I look into the fiscal year 23-24, taxable rental income from cottage, 14,500, and other rental income, fine, 32,000. employment income. Property income, 14,500 plus 32,000. 46,500 total income. Personal allowance. How much would be the personal allowance? So since the income is more than 100,000, it should have to be tapered. It should have to be tapered theoretically. But since uh, Pedro is making a personal pension contribution, hence band would have been extended. I need to discuss this point. Personal allowance. The pension contribution which qualify for tax relief cannot exceed Pedro's relevant earnings. For the tax year 23/24. Pedro's relevant earning for 23/24 are 75,000 of employment income, 14,500 of FHL property income. Other property income do not qualify for earnings for 23/24 are 89,500. Hence, the whole of the 85,500 of contribution is eligible for tax relief. Adjusted net income. Any of Pedro would be 121 minus 85,500. Correct me if I'm wrong. 85,000, the gross amount of personal pension contribution. Correct me if I'm wrong. This is 36,500. So there is no restriction of the personal allowance. So, Rishu Easter Abdullah Siddiqui, I just read your comments. I hope the discussion on personal allowance should be clear, right? Head, heading back. So, 12570 personal allowance. Taxable income. Basic rate is normally 37,700. The basic rate would have been extended by 85,000, the gross amount. Hence, my basic rate this is my revised basic rate band, right? One zero eight. Then I can personally feel that there would be some annual allowance charge. Annual allowance charge would be by the amount. So put one line, two line for the annual allowance charge, and then Ummehani, yes, your assumption is understanding is 100% correct. Imagine if relevant earnings are only 75, then the 7,500 would have been considered in the calculation of any 75,000 band would have been extended by 75,000. Annual allowance charge calculation. Contribution by Pedro is 85,000. Contribution by Law Limited occupational pension 8,000. Total contributions for 2023-24. So the total contributions for 23-24 is like 93,000. Then annual allowance limit, annual allowance available limit for 23-24. For 23-24, the complete 40,000 would be available. Would there be any tapering of this limit of 40,000? The answer is no. I will be capturing this comment, which I'm just sharing with you. The answer is no, there will be no tapering because the threshold income is less than 200,000. So I'll be coming back over here. Annual allowance limit 23-24. $8,000 contribution made by Law Limited in last year as well, as he started in employment as a result. So the total contributions 93, the limit is 40 and 32. So annual allowance charge would be on threshold income. Threshold income is net income. Net income is 121,500 net income minus pension contribution gross amount. So the pension contribution gross amount is like 85,000. As a result, threshold income is by the amount 35,000. And I am like, and the annual allowance limit of the Pedros I'm done. If anyone of you has any kind of question, do raise your hand, please. Anyone recall what was the original income tax liability given in the question? So if I look into the overall income, 40332, that's 40332, and it is including annual allowance charge 27432. Income tax liability with the pension contribution will be 27432. Payment of personal pension contribution leads to the reduction or savings in income tax of 40332 minus 27432. In Pedro's income tax liability for tax year 23-24. I'm done. Uh, Let me look for your questions one by one. So, Abdullah, yes. Esther, let me come back to your points. Just give me a minute. Let me have us answer this one liner question. I have a question that is it necessary to make a loss memorandum with every question having loss element? So, Aman, the answer is no. But in all of the questions, there is generally the requirement of like you need to demonstrate the unused loss kind of thing, right? So wherever you are supposed to demonstrate unused type of loss, the unused type of loss can only be demonstrated via the memorandum. So indirectly, yes, you can say that you would be supposed to prepare memorandum in each and every question indirectly. Easter verbally recap computation. So I understand your verbal recap element. While verbal recap, I'm not recalling the income tax element. Okay. I am restricting myself towards the annual allowance charge and the pensions contribution thing. Since I'm done with the typing, uh, so I can turn on my cam because while writing the screen further goes down. Keep remember, whenever you are going to consider the pensions, first of all, you must consider the amount of the maximum pension limit, higher of 3,600 or relevant earnings. What is the maximum limit available to you? Because then you need to determine like whether you need to restrict it or you are not supposed to restrict it. Because if the relevant earnings, like someone asked during the question, if the income is, let's say, 75,000, relevant earning is 75,000, then can we contribute 85,000? The answer is no. It means in such situation it will be restricted at 75. So first thing to determine. Second thing, check the threshold income, whether the threshold income is greater than 200 or less than 200. If the threshold income is greater than 200, then tapering might be applicable. But if the threshold income is less than 200, tapering would not be applicable. Full stop. Third, if and third point would be if threshold income is greater than 200, then you need to check for the adjusted income. If adjusted income is more than more than 240, then tapering of specific limit must be done. But if the income if the adjusted income is less than 240, tapering of a specific limit would not be applicable. Uh, Fourth thing to consider, whatever amount you have contributed, and please, while considering the contribution amount over here, you are supposed to consider occupational pension gross amount, sorry, personal pension gross amount, occupational pension, both employer employee contribution were applicable. Okay. Then deduct the brought forward unused current year allowances if available. Then after deducting brought forward current year unused allowances, if the contribution exceeds the limit, the unused limits, on the excess amount, you need to put a annual allowance charge. So on the excess amount, you need to put a charge which is called annual allowance charge. Someone was asking, I can't see the annual allowance charge. So this is 21,000 over here. And the sum of these two is like 21,000. So how this thing is calculated, this thing is basically the space available in the basic rate band. And then if you notice, so this is like 21,000 annual allowance charge minus the amount which is captured in the basic rate into 40%. I'm done. Any further question, please? Umesh, if an individual is UK resident but not domiciled, then overseas assets should be subject to CGT. The answer to Umesh, the answer is yes, because CGT is something which is linked with the residency status, not with the domicile status. Domicile status would help only in determining whether the residence remittance basis is available or not. That's it. If the question mentions this is gross amount, should we do additional? If the question mentions this is gross amount, should we do additional calculation? The answer is no. We should generally, if the question says this is net amount, then we need to gross it up. And to gross it up, we need to divide the amount by 80%. Else, no other implications of the gross element. Band would be extended by gross amount. In adjusted net income, the gross amount would be considered. Should we mention pound sign when answering amount? Uh, it's it's a good thing if you mention the pound sign, but not mandatory something. Again, it's good. So specifically, if you are following the spreadsheet formats, put the pound sign at the top, strongly advisable, but not a mandatory thing. Third, personal intent to do some past exams in the week under exam conditions. Uh, Easter, I would not commit to mark. I try my best to mark, but it would be very difficult for me to make a commitment for marking. But I try my best to mark. That's the Umesh. The answer to this question is it was mentioned that the shareholding is less than 1%. That's why we not considered the BADR in the core question. Um, can we mention this in exam? What? You are not considering BADR? Do mention. That's perfectly fine. Like you just need to specify that BADR conditions not met as he holds less than 1% shares. Good to have. What do you suggest for us to do in these few days? That's a good question. What I suggest you guys to do in these remaining days, which is like approximately 10 days from now. I suggest the revision should be now on based on the summarized notes which I have shared with all of you, right? In your respective groups. If you need to revise, please do refer that. There is no need to look for the from the register, from the comprehensive notes, from the lectures. Now the time is the remaining time. It should be learning by experiment. Learning by experiment means the learning should be only by solving the question. So solve the questions, mark the important points. That's it. And please do keep using the portal ACCA platform because if you don't keep it under practice, even though you are very well versed with the ATX, it would be very difficult to pass the exam because at the end, your paper is on. It's like you have the ability to fight, you know how to fight, but if you don't know how to use the weapon in the battle, honestly, you can never ever win the fight. So that's why it is necessary for all of you guys to be familiar with yourself with the platform. I try my best to get familiarized to to give a push a start towards this platform. Uh, even though I till I recall, I attempted maybe 4, 5 questions or 6 questions in total. Even if I attempted all of the questions, it's still the more and the most important thing is attempting question on your end. So please do go up in the graph. Uh, so when calculating annual allowance charge, why did we take into consideration only 2 years of 40? Because I only consider 2 years because the person was. Is now my voice clear? Rishu, I simply said practice. You guys have to practice on the CB platform because it's your practice, which you practice at your own. Even let's say, if you guys solve all of the questions with me during the lectures, for example, it is still insufficient. But if you practice, let's say 3, 2, 3, 4 papers at your own, that would be perfectly fine. Is my voice fine now? First, I need to sort this out. So, is the examination element clear? What you guys should do till the exams? Okay. Hassan, what to repeat? Please do specify what to repeat. Like, sir, please repeat. So, I asked the question, is my voice clear? That's simply my last question. Hassan Afzal, everyone, please listen carefully. From now till exams, no need to go towards the lectures. The learning should be learning by practice. Like whatever questions you are solving via exam kit, via the ACCA platform, learning should be based on them. Okay. If you need to revise anything for a quick reference, the refresher notes, the revision notes, which are summarized, they work. So you should refer them now, considering 10 days left to the exam. Secondly, make a good practice on the practice platform because even if you guys solve all of the questions with me at a practice platform, still it's insufficient. Rather, if you guys attempt even half of the questions on practice platform, that would be awesome because it's your practice which has to go up. It's not, very honestly, my practice which has to go up. So to enhance your practice, to increase your practice, please, please, please make a very good practice, hands-on, are well versed with the text knowledge, but you are not very well versed with the computer, the CB platform. It would be like you are in the battle, you know how to fight, but you don't know how to use the weapon. So you should be very clear for this. Um, there was one question. I forgot the name who asked that, but why we not consider the pension of prior years? So basically, for the pension scheme limit to be available, one of the condition was person should be member of pension scheme in that year. If I look over here, Pedro had never been a member of pension scheme prior to taking up employment with law limit. So since Law Limited was his first year when he when he when the pension contribution was made on his behalf. So that's why I only considered current year and prior year, because if a person is not the member of pension scheme, pension limit would not be available. You are most welcome. Umesh, if non-UK domicile, then no UK IHT. So Umesh, this statement is wrong. If a person is UK domicile, he has to pay UK IHT on worldwide assets. But if a person, then this is statement number one. Statement number two, UK assets are always subject to UK IHT. So irrespective of the domicile status, if a person is if an asset is UK asset, the asset will always be subject to UK IHT. Other than that, so exclusion from domicile is if a non-UK domiciled person owns non-UK asset, then it is exempt from IHT. A non-UK domiciled person owns non-UK asset, then there is no UK IHT. Because if non-UK domicile owns UK assets, UK assets are always subject to UK IHT. Ummeman, the answer is yes, because I want you guys now to like give your best. I am still available on WhatsApp. If any query on anyone's side, please feel free to reach out. I would be happy to address your queries. I hope I'm audible still. Perfect. You're most welcome, Easter. You're most welcome. Still, uh, that's a very sincere offer to all of you guys. If anyone has any kind of query, please feel free to reach out. Like, raise your hand, raise your voice is better always. You're most welcome. It's good to connect with all of you guys. You guys are great. You guys are great. Supported a lot, because if you guys are like on a listen only mode, honestly, I would not be enjoying the session rather than you uh like even though I would be teaching, but not as much enjoying as now. So I'm going to exit this by the way. If it's still anything else, I just want to share one further thing with all of you. So I don't know. I'm not sure how much it is relevant for you guys or not. But since I have one thing available with me, so just want to have a discussion. Maybe the last thing from my side. Um, I have a summary. Uh, please listen to this thing very carefully. I have a summary. Make it up, up register pages. Uh, Not very long, maybe 30, 40 points in total, which summarizes the key differences between the taxation of individuals versus the taxation of companies. I'm not sure how much would it be relevant at ATX level, but I'm for sure it is very much relevant for TX level. And I do share with all of my TX students. So I will share that with you guys as well. With you guys as well. Um, do have a look. Spend maybe few minutes on that. If you feel good, keep referring that. But if you are like, no, it's very uh basic thing, then you can ignore it. Very honestly. Okay. I'll share that with you after this class immediately. I'll share that with you. Um, Umesh, for sure, just give me a minute. Um, can Inshallah, my best wishes and my best prayers with all of you. Um, for sure. So I have saved the PDF of the questions we solved today. I shared the PDF of the questions on Friday. We'll share these PDFs shortly. Mm. Rishu, rather than memorizing, the fundamentals should be very clear to you in your mind, like what to do in what situation. Because if you ask me the literal meaning of memorization, if there is anything change plus minus, that will create a confusion. And to avoid the confusion, the most important thing is the concept should be clear rather than the memorization element. Or other way around, I can say the memorization should be along with the concept, clear concept. Um, Perfect. Thank you. I just want to ask, request all of you guys one thing. Uh, your views will be respected, obviously, but if you guys don't mind, all of you, can you please turn on your cam? I just want to take a picture of the ones who are in the class now. But if anyone don't want to, please, you are perfectly like you can do that. At least do let me know. Hassan Abdal, uh, Eva, Easter, Norman, Umayman, up to you. Because this is something which I understand. Like, it's not necessary that I am in proper dress, everyone would be. So that's the norm of the work from home or online element. It's good. So with all of your permission, I'm going to take a picture. Uh, you know, this is how we used to stay connected or take the memories at COVID times. This is something which I learned from the COVID times. Just a second. Perfect. So I'm done. Thank you very much, guys. Take care. Stay blessed. Goodbye. Umesh, I'm still here for your question. Thank you, all of you. Yes, Sumesh. So your question is around, let me open up the PDF. Overseas aspect. Just a second. Take care, you issue. So you are asking me. Hmm, Umesh, I hope my screen is, sorry, my screen is visible. So you are asking me to move on page 4. This is, I'm on page 4. Yep, my boy. Sir, here CGT on overseas assets are after domicile heading. Yeah, for sure, issue. Just a second. So, page 5. Tax rate and allowances when CGT will be paid. Uh, Umesh, very clearly, I don't know where you are referring. She will be non-UK resident, but she'll be regarded as she, this. So, even if you look for question number 5, there is no discussion of domicile over here. In question 5, all of the discussion is with respect to the residency. Even question 4 talks about residency. I don't personally feel liability to UK CGT heading. They're heading after question 3. Uh-huh. Heading after question 3. Heading liability to UK CGT, right? So the heading is liability to UK CGT. If I look this heading, liability to UK CGT, the first thing is a person. the person resident or no? Uh-huh. So if you look, the answer is no. Imagine. So probably now I pointed out perfectly. You are basically referring yes and no, right? So if yes, you can CGT on all overseas assets. But if the answer is no, so you are basically referring this point, right? Right. So you are basically talking about maybe this heading. UK domicile, yes, UK CGT on all overseas assets. If the answer is no, then what? If the answer is no, then remittance basis is available. The word is available. And when the remittance basis is available, it has its own terms, conditions. If unremitted income and gains less than 2000 automatically, more than 2000, you need to claim it, etc., etc., etc. And again, if you not opt for remittance basis, then by default, the gains would be taxed on arising basis or accrual basis. So, remittance basis is an option which would be available if you are non-UK domicile. But if you are resident and domicile, then even this option is not available. Remittance basis, this is an option which is available, and at times you need to purchase this option. So at times, this option is not by default available. At times you need to purchase this option, and for purchase you need to pay the amount, and pay the amount is like, I hope you recall how much you need to pay the amount. You need to check for how long the person is living, 7 out of 9 or uh, 17 out of 11, whatever that tenor was. So to Umesh, let me rephrase. Your conclusion is right. But if a person is non-UK domicile, so resident, yes, domiciled, no, still, still there is a UK tax on overseas assets. However, remittance basis would be available. However, remittance basis would be available. And the same thing goes to the overseas income as well. Because if you, I'll be back over here. If you look on the overseas income, remittance basis is available. The word is available. The available word is common under both the situations. And this leads to the question which is just raised by your fellow about the remittance basis. So now, what is remittance basis? So remittance basis, for remittance basis, you need to check if a person is UK resident, answer no. Then overseas income is not subject to UK income tax capital gains tax. But if a person is UK resident, not domiciled, no. Not domiciled, no means the person is UK domiciled, resident and domiciled. Then overseas income and gains. Overseas income and gains taxed on arising basis or accrual basis. But if a person is resident but not domiciled, in such situation, remittance basis is available. In such situation, remittance basis is available. Now, you need to check, is your unremitted income and gains, unremitted income and gains is less than 2000, yes or no? If your unremitted income and gains is less than 2000, then remittance basis will be automatically available. But if your unremitted income and gains are more than 2000, then you have to claim remittance basis. Keep remember, if the remittance basis is automatic, you will get annual exemption, you will get personal allowance. But if you claim remittance basis, then there will be no personal allowance, there will be no annual exemption. So in wordings, it is referred as that your annual exemption and personal allowance will be withdrawn clawback. Now, if you require to claim the remittance basis, your age is more than 18 and you are UK resident of 7 out of 9 or 12 out of 14, then you have to pay a remittance basis charge. Means you have to pay to purchase this option. You have to pay to purchase this option, which is like either 30,000 or 60,000. And like if you are like less than 7 out of 9 years, then you are not supposed to pay this charge. You are not supposed to pay this charge, but keep remember, keep remember, your and personal allowance annual exemption would still be withdrawn. So I'm done. If any question. I hope this is clear. If non-UK resident, then only CGT will be on temporary resident rules. What about over? So, a good question, Rishu. Be very clear, please. The temporary non-resident concept is only for CGT purposes. So, for for income tax purposes, there is no such concept of sorry, there is no such concept of uh, let me repeat. Sorry. Uh, for CGT purposes, in addition to the residency, we have a concept of temporary non-resident, and temporary non-resident is as good as resident. But for income tax purpose, there is no concept of temporary non-resident. The temporary non-resident concept is only for capital gains tax purpose. No, no, not at all. Like I said, temporary non-resident, even uh, on a different note, I would answer this point. Temporary non-resident has nothing to do with IHT because IHT itself has nothing to do with residency because IHT is linked with the domicile status, not with the residency status at all. So residency in IHT is irrelevant. In IHT, what matter is the domicile status. I hope this is clear, right? Perfect. Anything further? Or I like to say you guys good night. Thank you. Thank you once again. Take care. Allah Hafiz. Best of luck for your exam. Thank you. Thanks to all. Allah Hafiz. Uh, for sure, issue, drop me a note to the WhatsApp. I'll share over there for sure. Thank you.